and Wall Street and the market panicked. And they panicked because of their immense capital expenditure bill in that Google even announced increasing. It's $205 billion that they expect to invest this year in data centers to cover to be able to attend the demand they are having right now. And if we look past the surface and look at the actual important numbers, what we will find, what you will see, is that this report was not only incredibly bullish for Google, it was incredibly bullish for the whole industry, and it was above all something that we say that effectively killed the bear thesis that says the idea that's taken uh, a big part of the heads of the market, and the idea that AI doesn't have a business model and that there's no path to profitability. The numbers indicate that is simply false, and we are about to see why. The AI bubble myth just died. That's the point of this presentation. The monetization is real, people. We have an increase from a year ago of almost 83%, and that's unbelievable. We're talking that Google Cloud is now a business of $100 billion, $100 billion in revenue. That's their run rate now. And as they keep saying, the business is currently constrained by capacity. And that's why they're investing $205 billion this year. Cloud revenue accelerated to almost $25 billion. The bears claiming that the AI infrastructure is a money pit without a business model have been proven wrong. And basically, they have been proven wrong because of the profitability metric that we are about to see in this slide. The profitability engine, as you can see, it is not only that Google is growing at an unbelievable pace, as we see here, right? 83%. It's that its growth is profitable growth. As you can see, just a year ago, in Q3 of 2025, Google, Google Cloud, the segment that sales compute, right? And AI apps, had a 22% operating margin, and it's been going up, and it's shot up to almost 36%, 35.6%. That's not a story right there that you see of a business without a business model. That's something that we have been claiming for quite a while. The bears have been talking as if Google and the hyperscalers were not the best capital allocators the world has ever seen. I'm not referring or saying they are the best of this era. Google, Google search is arguably the best business ever made by humankind in terms of free cash flow, in terms of actually making money and actually making money with resources, right? And all of a sudden, what bears have been claiming is that they became dumb. They don't know what they're doing. They just went crazy. They ran out of ideas. They became crooks. I don't know. But the idea that these companies are investing money just because they had a dream, they're dreaming, has always been weird to me. And these numbers are proving that they have always been weird. 35.6% of operating margin for a business growing 83% per year. That's a business that's worth investing in. That's a business where I want to have my money working. And I think everybody should be uh, thinking about allocating money to what's happening right now with the $514 billion backlog. This is very interesting. The backlog grew 394% per year into a massive $514 billion. And it went up about $50 billion just in a quarter. And the most interesting thing was not that. The most interesting thing was that the near term revenue. The CFO said more than once that they expect revenue, they expect to materialize that backlog into revenue in the next 24 months, about 50% of the backlog. That's $257 billion. You make some numbers, and if you assume that operating margin of 35.6% is going to be sustained, and I can say safely that that's a base case because, as we saw in the previous slide, the business profitability is improving dramatically even. So if you assume that the margins are going to uh, plateau from here, you're talking about a business that's that makes more than $40 billion per year in 2 years of operating profits. That's the kind of growth that we're having right now and that we have visibility into. As I said, the concern, the fears, I think we need to call them fears, is that somehow profitability is going to not be there in the for all this capex that's going on. And we argue that's false. There's no evidence that points to that. All it's basically the opposite. What we're seeing is that Google, precisely Google, has been showing that their vertical integration, the fact that they own the whole stack, has been an important source of competitive positioning and competitive advantage to them. We have been arguing for quite a while now that in the event, in the even kind of likely event, although Demis Hassabis says the LLMs won't commoditize, but in what seems now a likely event that all models become practically the same, the moat, the competitive advantage, and the layer, the chain in the value chain of AI that's going to be extremely profitable, most likely, is the one providing or the providers of the compute. We will have, we are likely to have a layer of providers of compute, hyperscalers, with very important margins, and also obviously the ones using the LLMs to develop new applications and new use cases. Those are the ones likely to capture value. And in the case of the hyperscalers, we have been arguing that the scale that's only possible with this kind of businesses, Google, Microsoft, Amazon, and Amazon Web Services, Oracle, and Meta, those are businesses that are in a league of their own. You don't have many even countries in the world with the capacity to invest $200 billion in a year. You don't have even most of the governments even of the world don't have a budget that size, even remotely of that size. I live in Dominican Republic. And the government of Dominican Republic, its budget is around $24 billion. So the scale eliminates the commoditization. You will need to have a level of scale in order to be profitable that it's there's simply not enough money to get there. And even when you find the money, you need to go and compete with titans of this level. So basically, what they're doing is setting up barriers of entry and a scale with their associated economies of scale that become an impenetrable wall for anyone trying to get in. And also, I like to talk about how these companies take commodities, products that don't have an important margin, like storage. They take hard disk drive and storage, an industry that's commoditized also. It's a commodity. Nobody's thinking about, well, nobody used to be thinking about storage, right? Right until this AI revolution, nobody was thinking about Western Digital or Seagate because they were commodity products. They were there were companies with a PE of 6, 7, 8 when the market was at 21. So they were treated as commodities. Well, we all know that Microsoft and especially Amazon Web Services have been providing cloud storage solutions with very with a very high margin in the 30 and even close to 40 something. So these companies will find a way with their enormous scale, with their incredible resources, not only money, but human resources and the capacity to innovate and all that. They will find uh, ways to make money in manners that nobody else will be able to get to those businesses. And that's why, uh, as opposed to what's the market and is reading from these important investments, my contrarian move is that the companies that go back in the spending when we have the level of demand in front of us that we are actually seeing, the ones that back down are the ones I don't want to have my money working in. For me, the bullish signal is actually going hard and invest to try to capture market now in order to get market share, have the scale, and be able to make money in an industry that's very likely to be the biggest one we have ever seen. So that's the thing. In this slide, we're talking about the model layer and how likely it is to commoditize, and the compute layer, just because of the scale, it's very unlikely to be commoditized. Yeah, that's why I call it the ultimate strategic mode, because infrastructure requires immense capital. A massive physical scale dictates cost leadership, making it the true bottleneck to capture value in the AI economy. They will be the providers of intelligence. And with intelligence comes value and all uh, all that we are chasing in this AI revolution. The compute mode. And here's an example, an interesting one. Um, as you can see, Claude Fable 5 is the leader in all benchmarks, but this is the price where you have to pay for Fable. I am not a coder, but I started developing some apps, and I'm a Google Gemini customer. I'm a paying customer of Google Gemini. I am expecting to be a paying customer of basically the three big ones of Anthropic and also OpenAI. But right now, I just don't need it. The apps I'm developing, I'm doing quite all right with my subscription to Google. And the price, look that's the price of tokens. It's a small fraction of Fable. And in competitive strategy, it has been always said that if you are the product leader, right? Fable, no doubt, best. But there's a competitor that can give you that's giving customers 80% of what you're given, 85% of what you're given for 50% of the cost, you are in trouble. And for the most part, when you are analyzing products and services, there are many considerations that could help you brand issues, identity issues that are very important to consumers. But when you think about LLMs, it's providing intelligence. I don't think those considerations are going to be valid. Those variables, you can have them out of the equation easily. I think that's quite obvious. So if you are, Google is giving you 50% of what Fable is giving you. I don't know, but I know the benchmarks say it's much more than 50%. Let's say it's 50%. When you're getting 50% for uh, what 24% of the cost, the product leader is in trouble. And that's the point. I'm not saying Google is the one who's going to end up with everything, but right now at this point, it is looking as very likely, let's say. Google right now, to me, is the king or close because of their vertical integration. Uh, if we are talking about the whole value chain, there's no doubt that this is Nvidia's party. Everybody's having fun, but it's Nvidia's party. And I'm going to enter into more details of what I've been researching about their positioning of and everything. But when it comes to the companies in the LLM layer, Google is offering incredibly, I mean, it's too much value. It's the value proposition. And in the end, in the case of commoditization, value is going to determine who makes money. Right now, that's Google. The supply constraint tail. Well, surge in demand, um, just capacity limit, and there was an interesting signal. Well, there were many. There were two interesting signals. Renting compute, they're talking about renting compute. So that's very bullish for the so-called NeoClouds, Nevius, CoreWeave, even Oracle. Um, but they need locked in and to their customers. They don't want to let them go out and experience find another supplier, right? They mentioned that renting compute to grow and to serve some customers is likely to make a dent in margins. That's understandable, right? Uh, but and the other signal that's important is how they mentioned twice that next year capital expenditures are going to be significantly increased. I don't know what you think is significant, but I say that sounds like at least 30% more. And that would put their investments for 2027 at about $270 billion. That means dilution or debt, and most likely both. And I'm happy with that. If they're going to invest $270 billion for capacity, that's going to allow them to sell compute and services with a 36% operating margin. I'm glad to be diluted. I am glad that they take debt because their debt is going to be what? 5%? I don't think so. It's going to be much cheaper. You, that, you want to be in a business that you want to be in a business where you are a cash cow producing $125 billion in free cash flow in this case, and you need another 100 billion to invest because you're going to make 36% per year of that money in a growing industry like there's no other. So I'm happy. I'm extremely happy with this report, and I'm looking forward for the next uh, for the ones coming this week. This week, Microsoft report and Amazon Web Services report. I would be impressed if they have anything remotely close to the growth in uh, the growth that Google just presented. I am not expecting uh, that much growth, right? But I know for a fact in the past quarter, Microsoft was growing at 40% from a much, much bigger base. So Azure is also a monster business with even better, much better margins than uh, Google Cloud. So the CapEx flow, let's talk about who takes the money. As I said, this is Nvidia's party. There's no doubt this is Nvidia. That's it. I don't want to go deep into details, but I have research and I'm gonna make another presentation, another deep dive in Nvidia. So Vera Rubin is simply amazing. It was nice to see us Sundar Pichai, the CEO of Alphabet, talking and referring with such excitement about how impressive the Vera Rubin systems from Nvidia are, and they are. They are simply in a league of their own. So it's Nvidia's party, but a lot of people is going to be having are going to be having fun. Uh, AMD, even when their products can't come close to the level of performance that uh, NVIDIA systems uh, have and will have in the next generation, will be an important beneficiary. And even Google in this report talk about selling TPU systems. That's very interesting because of what we saw of their cost leadership for their very specific use cases in with Gemini. TSMC is uh, a global monopoly. They're the ones able to make the chips of 3 nanometers with efficiency. They're gonna be printing cash. Uh, Memory. There's another video also talking about memory. We've been talking about how impressive better roving the next generation systems from Nvidia are. What's obvious at this point is that most of the improvements in performance in those systems came from improvements in bandwidth and the amount of memory. So the density of memory, it's way higher than what the big three mentioned here, Micron, SK Hynix, and Samsung, are going to be added in the next 2 or 3 years. So we're going to be uh, bottlenecked still by memory and memory bandwidth. They're going to be making a lot of money. And the NeoClouds, they Google already talk about being in need to rent compute because they don't have enough capacity. So they are very likely also to uh, be making a lot of money. And yes, that's what I wanted to present today. And we are going to, as I said, we're going to be uh, making another video, making another deep dive with Nvidia. But at this point, what I'm searching, and I think we all should be looking for is and for the companies that are willing to capture the immense opportunity that is obvious in front of us right now. I don't want to see a company. I don't want to have my money in a company that's uh, doubting at this point, and none of them are right. Really, they have been talking about. They have been telling us for quite a while of the immense demand that they're having and what they're seeing. Now, uh, we not at that level of information, right? We now are being exposed to the incredible growth and the unreal demand that they have, and that's why they went all in into this uh, capital expenditures because they know and they're seeing what the models are capable, and they anticipated what people were going to be able to do with with the systems. So uh, this is extremely bullish for the whole industry, for all hyperscalers, for the providers of the pick and shovels, as we saw in the previous slide. Uh, I'm gonna I'm gonna be putting more money into Google. Google used to be my second top position, but I sold a month ago. I sold at a very good price. Right now, Google is about 23, 24 times 2027 earnings. I always say that's underestimated earnings. It has been uh, earnings and sales and everything have been extremely underestimated. The only one telling the truth about the scale of what's coming in this whole process has been Jensen Huang, Nvidia CEO. Rest of us mere mortals, we have been wrong. We have been underestimating what's coming. And well, yeah, Microsoft even cheaper than Nvidia. I mean than Google. 20 times earnings. I think Google deserves the premium right now because of the position they are in terms of what they will be able to do, many things they will be able to do with AI. They are the AI integrated company, and that's for me that I'm a super bull, not a bull. I'm extremely bullish AI. For me, that warrants uh, a bigger multiple uh, in Google than Microsoft. That's hard to say, but it is what it is. I think both companies are extremely undervalued, and this is not financial advice. I'm just sharing my thoughts and opinions and my analysis here, so we can learn together, talk together about this journey, and uh, you as this is not financial advice, you need to make your own analysis, and I hope that you can comment on the things that you find useful. If you think some parts of the analysis are wrong, I would like to know also. I'm always after bearish comments, and the whole point of these videos is uh, have a community around of people, of investors who analyze stocks, and we can uh, we can be as a community and analyzing and trying to uncover uh, investment opportunities. Right now, I'm extremely bullish in the whole AI value chain, in which Google, if not the king, is a huge prince, let's say. Uh, and well, personally, my money's gonna go there. In the next couple of days, I'm gonna be sharing a few more videos with analysis of the segments of the industry that I think will be important winners in the next couple of years. So, I hope to see you. Subscribe if you think this content has been valuable, and above all, engage. Let me know what you think. Let me know your thoughts. Let me know what parts of all this is wrong. That would be extremely useful, and I would be very thankful for that. So